Nvidia's $20 billion strategic masterstroke, licensing Groq's inference edge and securing AI leadership. Hello, fellow investors. Welcome to InvestTrek, where we cut straight to the facts on the capital moves reshaping technology, innovation, and economic strength. Just days before Christmas, on December 24, 2025, Nvidia executed what multiple credible reports now confirm as their largest transaction in company history. We're talking a deal valued at approximately $20 billion, not a traditional acquisition. A carefully structured, non-exclusive licensing agreement for Groq's breakthrough inference technology, combined with the strategic relocation of key talent. This is no small pivot. It's a calculated defense of market leadership and a bold play for the future of AI. Let's lay out the facts clearly. Groq, founded in 2016 by former Google engineers, including Jonathan Ross, the architect behind Google's original tensor processing units, developed the Language Processing Unit, or LPU. Unlike general-purpose GPUs, the LPU is purpose-built for inference, the high-volume, real-time execution of trained AI models. Think instant chatbot responses, voice agents, robotics, and edge computing without the lag. Groq's design leverages deterministic tensor streaming and massive on-chip SRAM memory to eliminate the data fetch bottlenecks that plague traditional architectures. Independent benchmarks and developer adoption show it delivering up to 10x faster performance, 10x better energy efficiency, and significantly lower cost per token. Millions of developers flocked to Groq Cloud for that snappy, reliable experience. Nvidia already dominates AI training with its H100s, H200s, and the newer Blackwell line, driving data center revenue into the stratosphere and pushing market capitalization well beyond $4 trillion. But the market is shifting. Inference now represents the explosive growth phase. Trillions of tokens processed daily as AI moves from labs into billions of daily user interactions, enterprise deployments, and real-world applications. Competitors, AMD, Intel, Cerebras, and Groq itself, were gaining ground in specialized inference hardware, threatening Nvidia's moat on latency, power, and cost for high-volume workloads. Nvidia's response, proactive and decisive. They licensed Groq's core inference IP, the very innovations that solve GPU memory bottlenecks, and welcomed Jonathan Ross, President Sunny Madra, and a significant portion of Groq's engineering leadership to their team. Groq remains an independent entity under new CEO Simon Edwards, previously CFO, and Groq Cloud continues uninterrupted. The structure is deliberate. A full acquisition would have invited years of antitrust scrutiny from the DOJ, FTC, and international regulators. This licensing plus talent approach, increasingly common in big tech, allows rapid integration while preserving the appearance of competition. Similar plays have been executed by Meta, Microsoft, and Google in recent years. The financials speak volumes. Groq's last reported valuation was $6.9 billion in September 2025, after a $750 million raise. This $20 billion deal, involving cash payouts for vested shares, accelerated vesting, and distributions tied to that valuation, delivered massive returns for investors, including BlackRock, Samsung, and others, and employees. Roughly 90% of Groq's workforce reportedly transitions to Nvidia with substantial compensation. Why does this matter strategically? It neutralizes a legitimate emerging threat before it scales into a broader challenge. It accelerates Nvidia's roadmap, potentially integrating LPU-like efficiencies into future architectures for even faster, more power-efficient inference. It deepens the CUDA ecosystem lock-in, making it harder for hyperscalers and developers to switch away. And critically, it reinforces American leadership in AI hardware at a time when global competition is intensifying. It neutralizes a legitimate emerging threat before it scales into a broader challenge. It accelerates Nvidia's roadmap, potentially integrating LPU-like efficiencies into future architectures for even faster, more power-efficient inference. It deepens the CUDA ecosystem lock-in, making it harder for hyperscalers and developers to switch away. And critically, it reinforces American leadership in AI hardware at a time when global competition is intensifying. Jensen Huang has long emphasized that inference will define the next era of AI. This move proves Nvidia is willing to deploy its enormous cash reserves, bolstered by recent quarterly inflows exceeding $22 billion, to maintain unchallenged dominance. Wall Street responded favorably. Nvidia shares held firm through thin holiday trading, with analysts describing it as a textbook display of strategic foresight and moat expansion. Looking forward, as AI agents, robotics, and edge computing scale, inference demand will skyrocket. Nvidia now positions itself to own both ends, the heavy training workloads and the high-velocity deployment layer. Competitors face a steeper hill. This isn't just corporate maneuvering, it's a statement. In the race for AI supremacy, America, through disciplined innovation and capital deployment, intends to stay ahead. What are your thoughts? Will this accelerate commoditization of inference or cement Nvidia's position for the long haul? Drop your reasoned takes in the comments, subscribe for more no-nonsense deep dives, and join me next time as the next major development unfolds. Until then, invest with clarity, invest with conviction. God bless, and see you in the next one.